Hey, what's going on, everybody? It is February 27th, and I just finished the day up about $22,000 on the day trading the NQ futures. And to be honest, I'm not very happy with my execution today. I want to talk about why. I actually was down. If we break it down in terms of accounts, I have 15 funded accounts. At one point, they were down about 3,300, and a lot of it was because of volatility. Like I wasn't over position sized. I kept on. I also did a setup that I probably shouldn't have been doing, and I really feel like my bias was affecting me. And I even said this with the simpler central room members. I was, patience is going to pay today. It's kind of funny. I had it in my mind, but at the same time, I didn't follow it. And so what I am going to have to do is like put a clock on my windows, like on my screen, my monitor, right? And just wait for the time to go by and then focus on being a little bit more patient because lately I have been hitting it probably too quickly out of the gates. I need to be a little patient. I don't know why or what's happening, why all of a sudden I'm feeling to just hop in guns blazing. I say guns blazing. I'm grabbing like one contract, but I'm executing too fast. And so I think I need to be a little bit more patient on it and maybe look for reversions to VWAP instead of playing VWAP breaks. But I'm going to go ahead and tell you why I was looking to buy the dip at the open today. If you're not aware, the market, or the NQ anyways, did sell off pretty good. I want to explain why I was looking to go long and where I took my stops. And then finally, where getting long at the right time worked out. And I ended up finishing up about $1,500 per account. Like I said earlier, I was down about 3,300. Now I'm up about 1,500 per account. But like I said, I'm not happy about execution, but I'm acknowledging it and we're going to move forward with it. So let's go ahead and break it down. All right, so first thing I want to talk about here is I've had a little bit of a bounce bias, a bullish bias, really, the last few days. It was there. I had it yesterday and I was wrong. I had it today and initially I was wrong. And the reason being is because I'm looking here at this daily chart of the NQ. And if you look over here, I talked about this some in the prior videos. But every time we come down to this zone, we do start to wick up. I'll just draw this line here and across. And you see this is a area where buyers are kind of stepping up. And to be honest, I was looking for yesterday's high to be broken to cause the up move, at least up until about point of control. However, it didn't happen. And also the volume profile suggests that, hey, volume is starting to dry up down here. So I'm looking for a bounce. That had me looking bullishly from a daily perspective. And then I go over to the hourly time frame. And this is obviously before this big flush. I'm going to make this a little bit more visible. There was a bullish squeeze being built pre-market and into the open. That's what I was looking for to see play out. And then also, honestly, the over-under level is probably right here. I should have waited more of a clearance right here, but I actually got long right at the breakout, and then obviously that did not work out. I did stop out, had a good tight stop, and we'll discuss that here in a minute. But that's why I was looking bullishly, looking for it to bounce from this level for the day anyways. I had my entry criteria met here in the lower time frames, and we'll talk about them here and go from there. So before actually I bring this up, we'll bring this over here to show the details. Okay, so these right here are evaluation accounts that I just had like lingering, and I did YOLO them and ended up blowing without the intraday trailing drawdown. I was like, oh, whatever, I'll play with these. And so I lost those evaluations, no big deal. But I do have these funded accounts right here, and you can see how they are up $1,500 to $1,600 at the moment. And now let's talk about the trade. The trades, I took a few. And the setups are all there. And like I said, I'm not happy about the execution, but I'm acknowledging it. All right, so here is my anchor VWAP from today's New York Open. The session VWAP from the Open last night is the green one. And this pink one is the low from the last major sell-off that occurred, 2 days ago? From right here. So anchored VWAP from that low. And then I also have these two VWAPs up here, which actually come from, I'll use the bigger chart, that come from whenever this major flush occurred up here. And I believe the other one, actually I should probably erase it, to be quite honest. So they're about the same. I believe that's probably the day's the anchor VWAP from that day's open when the sell-off occurred. So anyways, so that is what those are. So from the last swing low, session today's New York VWAP, and this one is from the highs whenever this sell-off started. I'm probably going to erase this one, to be quite honest. This one was just more of a reference point, and you see what's kind of happening here. All right, so like I said, I was leaning bullish, and I'm going to show this setup here. So I'm leaning bullish, and now I'm using the VWAPs as my entry for stops and things like that. So if I'm looking at it like that, I was right here. Here's the open, right? We don't know the sell-off is going to happen yet. I waited, so we'll just put it like this because this is how the market was, right? Um, actually, that's just a little bit too much. We'll just pretend it's there. So whenever price started to reclaim and right here, so it bounced around a little bit, it did hold here. I'm like, okay, maybe it's going to hold and we're going to break out, right? Like I talked about, breaking this level and go back towards point of control. So I was all right. I was looking for that move to happen. So we stayed strong above the New York, or sorry, the New York session anchor VWAP. I got long right here. Put my stop at the lows, gave it a little bit of wiggle room, and it did flush down and kind of held here. I'm like, okay, I'm holding it. And I usually aggressively adjust my stops as the market moves in my favor. However, it just went down quickly and stopped me out. So I'm all right, that's one trade wrong. All right. And I do use VWAPs a lot for trades. Another setup I enjoy doing is reversion to the mean. So when price gets really extended, going in one direction, I can go up or down, either one. As prices get really extended down to the third or fourth ATR, I will look for the break at the high of the low bar, looking for that reversion back to the 21 EMA of whatever time frame I'm looking for, or even go past it. It depends on what time frame is the most extended. So in this case, this is what's happening here. Is I actually try to catch a few knives is what happened. I'm okay because I'm looking bullishly. So the way this setup works is it was the higher time frame trending a certain way. In this case, the daily time frame, I'm looking for a bounce, right? So then I start looking at lower time frames for signals of a bounce in the extension, which is counter trend to the higher time frame because you're getting in at a really extended ATR. If you think of ATRs in terms of standard deviations, right? If price is really extended to a standard deviation, there are algorithms that'll come in and place it back to the mean, right? Or trade it back to the mean. And that would trigger covering and whatnot. And so I'm looking for that extension and then looking to take it back up to the mean. So that's the idea here. So I'm thinking big picture, higher time frame trend is higher. We're kind of at the areas of the daily time frame where I'm looking for support to hold. So I'm looking bullishly to come in and buy at these extended ATR levels. So the extended ATR levels, as price came down to here, we flushed low. I was all right. I'm already leaning bullish on the daily time frame, right? And so let's see here. As price flushed down to this little zone, I'm going to actually pull back here. This is on the hourly time frame. And what I want you to know at this point is this zone right here, which is where I got long, is the same area where I was looking for this to hold. So what is a break of the high of the low bar? So whenever this candle got extended down and we broke above that high by this candle, that triggered me long and I'm gonna stop right here. And you can see that was quickly rejected. So that's two stop outs right there. And the volatility in these candles is huge. And to be honest, I maybe should have traded micros. I acknowledge that in hindsight. So I got long about what, 27, stop all the way down at 70. I mean, in hindsight, where I'm not in the moment, like trying to calculate, I should have traded micros because that is a pretty significant stop level. And so that being said, like I said, I should have done micros, and then also it also led to bigger losses than I wanted. So that's two losses that put me down at about 3,300 per account. I'm like, all right. So now it gets to a point of, do I close it and walk away, or do I still wait for this setup? And to be honest, I don't know. I probably should have walked away, but I waited. I let the market get me into position on this one. So I'll show you exactly what I did, and it's something you could do as well. But I was like, all right, I'm not going to market in or anything like that. I'm going to let the market get me into position, and I'll show you. So what I mean by let the market get me into position, so I waited all the way down here, right? I got long, started to get long down here at this level, and I will show you this. So you see what I'm talking about. So I have an average fill of 77, right? 977. And here's one of the other losses I had there. And this one ended up being almost 5 grand and it made up all the losses. But I wanted to show that my average entry was 977. Did have 3 contracts and I scaled into position. I was like, I want to let the market get me in. So first off, when we're looking down here, I want to zoom back here on the hourly time frame. I'm already looking at these levels of support. Right, so we have all of this right here. Looking at the levels of support, and then I'm like, all right, so now I want to go ahead and look for potential entry. And so when I saw this doji form, as price came down to this zone here and this zone here, I'm like, okay, this will be my last time to take a shot. So I decided to scale in. What I mean by scale in is, okay, we close on a doji, I'll put a stop order to get in here, stop order to get in here, and to get in here. That's all right. So I scaled in, stop right here, and as it moved up, I quickly moved my stop loss to here, and then just trailed it as it went up. I did take profit at this first level right here, and then the second one was up here at there was the, what do you call it, the 21 EMA right here in the 1 minute was right here, and then I closed the last one about right here, right in front of this VWAP here, the New York Session Anchor VWAP. It was all close enough. I'm back green. I am just going to get out and judge myself because I did not like having to take. I feel like I was too soon. I should have been patient, and I think that's the one thing that I think I'm having that's bugging me the most is because yesterday I got in too fast. Whenever I took the losses where I lost that $41,000, I was impatient and got in too fast. So this is starting to be a recurring issue, right? So I'm acknowledging I have an issue. I'm like, hey, something is making me impatient now, and I need to correct it because I already had one red day from it. I almost had two today. Now that I see it, let's correct it. And so that is something that I think I'm beating myself up about. But because in hindsight, like here is the trade I should have looked for, and the trade setup I love trading. And so this late in the day, I like to go to about the 2 minute. Look, here's the setup I enjoy trading perfectly right here. All right, New York Session VWAP after a big move. The trend is obviously lower. We rally up into the VWAP here. Oops, that was supposed to be a different shape. Right, price rallied up to the VWAP, started to fail. I could have easily just got short here, stop at the highs, and hold on for these moves right here, right? Going with the trend instead of trying to couch it or catch it counter. And going counter is not the easiest. It's uncomfortable, and a lot of it was just because of my daily bias. And I admit, like I said, that's something I am going to have to fix and work on. So that's the trade I had. Like I said, scaled in as price started to break the high of low bar here, scaled in, stopped right here, and I closed it right here at 40, and then at the 21 EMA in the 1 minute, which is about here, and then right up here, right where these wicks are, I closed it. This is where the anchor VWAP was getting close. I was all close enough and just got out of it because mentally I was like, all right, I'm already doing this wrong. I need to get out of the way. But that is it. So hope you found this video helpful. I'm being as transparent and as realistic as can be. This is part of the game here whenever you're trading with firms and day trading. Sometimes in your head, for whatever reason, you're off the groove and you will take some losses. But at least finishing green, I'll live to trade tomorrow and we'll see what happens. See how February ends. So far, only one red day in February, which is pretty solid. And better, let me knock on some wood real quick, because who knows what's going to happen there. But everyone have a good rest of the day, and I will catch y'all on the next video. If you found this video helpful and you have any questions, by all means, throw them in the comment section. I'll get back to you. Have a good day, everybody, and I'll see you tomorrow's trade recap. Oh, one other thing. If you would like to come trade with me and learn how I trade futures and how I like to use these prop firms as a way to leverage my capital and use my skills without having my own money tied up in an account, there is a link in the description box. I would like you to click on it, and I'll show you what it looks like. If you click on it, what it's going to do is it's going to sign you, bring you to, sorry, it's not going to sign you up. It's going to bring you to this webpage. And when you come to this webpage, what it does is it's going to tell you everything basically for one, you could join this waitlist. And what is this waitlist? This waitlist is basically a wait list showing that people are interested in trading with me. So I'm trying to build my own trading room at Simpler Trading, and in order to build that room, there has to be at least some interest in doing it, right? So, I mean, it makes sense. They're not going to put money to work if no one's interested. I mean, it makes a lot of sense. However, if you want to come learn with me, this is your wait list to sign up to where you get all the details first, if and when it's going to start becoming available. Also, another thing, I want to kick this off right. So what I am pushing for is to do a 2 to 3 day live in-person bootcamp, meaning we will be together somewhere. We'll all be in the same room. We'll all be talking. We'll all be trading together, literally in the same room, having a discussion over futures and how to trade them and strategies, and literally me teaching you in person how to do it. I think you get the best learning experience out of that, and everyone that would be there as well if this does happen. So once we're in our own little chat room, you'll see someone's username or whatever talking, and you'll know who you're talking to because you met that person at the live event, things like that. You'll build some camaraderie with other traders there as well. So if this is something you're interested in, something you'd like to be part of, please sign up. And like I said, here's all the details again. Just click right here, join the waitlist, and then here's everything. It basically says so you'll get exclusive updates directly from me. I'll get them to our email team. They'll come to you. You get special discounts and savings and stuff like that. And then also, I'll be sending out in-depth trade reviews as well, so you can kind of stay engaged with how I am seeing things before they start. And also, you'll get the details on the live event if this happens. So, like I said, this is something I think would be great. There's a link description below. Click it, sign up if this is something you're interested in. There's no money up front right now. We're just trying to see, hey, how many people are interested. They're saying, hey, I'd like to do this. And then later on, we'll get going and we'll see how that all plays out. So, like I said, one more time, if you would like to trade futures with me, sign up at the link. And also, this is for we can see how many people are interested in going to a live in-person day trading boot camp. All right, good luck, everyone. Have a good time out there. Take care.